Arbor Realty Trust just released earnings earlier today, and they reported solid earnings with a beat on EPS and revenue. The stock went down anyways, and year to date you're looking at minus 14%. But people love ABR stock mostly for the dividends, and I understand why with dividend yield at 13%, which is an insane number. The growth numbers are also pretty impressive. So, could this be the perfect moment to buy ABR stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does ABR do? Arbor Realty Trust is a specialized real estate finance company, and this is very important. It is not a REIT, but a finance company. It invests in a diversified portfolio of structured finance assets in the multifamily and commercial real estate markets. Diving into the earnings, we see that net income was reported at $0.31 per share, and distributable earnings were reported at $0.47. Dividends were declared at $0.43, resulting in a 91% payout ratio. So dividends are covered, but it has to be said that it is a small window they have here with only 9% left. But more on that in a minute. ABR also repurchases 11.4 million of common stock at an average price of $12.19, reflecting a 4% discount to book value. And here we see that ABR has a high focus on multifamily homes with 84% of their portfolio. Single family represents 12%. It is growing year over year, which is very nice. They are acquiring more single family homes. Now let's talk about the dividends. They are coming in at $0.43 per share. Last year the distributable earnings were at $0.62 and $0.4 in dividends, meaning the dividends were covered pretty easily. But with everything that is happening right now, the net income is decreasing, resulting in a lower distributable earnings per share, meaning payout ratio is increasing. I don't think this is a long-term problem, but more a short-term problem. However, it is very important to keep an eye on this number, since you don't want to exceed the 100% here. In fact, I think it is necessary that this number is decreasing in the coming quarter. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. ABR is a 2.9 billion market cap company. PE ratio is at 7.7, which could indicate that they are undervalued right now. Later in this video I will show you my 3 price targets for ABR stock, so make sure to watch until the end. Because PE ratio is only telling a small part of the full story here. Revenue is at 721 million, and in this graph we see that revenue went up in the long run. Most recently, revenue is slowing down a little bit. Over a longer period of time, margins are going up and down a bit. Most recently, margins seems to be stabilizing. Let's see what in the coming periods will happen. EPS is following the same pattern as the margins. I would prefer an increase of course, so keep an eye on this number as well. Analysts expect a decrease in EPS this year. From there, they expect a small increase. So it's gonna be a tough year for ABR. For the revenue, it is a pretty similar story, and to me, this is both pretty interesting. I think it also really depends on what the Fed will do in the coming periods. Return on assets is sitting at 2.36%, which is a low number. Return on equity looks really good. Return on invested capital is sitting at 3%, which is slightly higher than the 5-year average, which is the positive thing here. However, To me, this number is too low. Current ratio is at 4.5, which is a potential red flag to me. I would like this number to be in a range of 1 to 2. Right now, ABR has 12 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. ABR has roughly 935 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up and down in the long run, but in general I would say up. Shares outstanding are increasing, which is not a good thing in general, but companies like ABR increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 13%, which is an insane number. Annual payout is at $1.72 and payout ratio is at 91% and not the 97% displayed here. I prefer 50% or lower, so right now they have only 9% left in cash to buy back shares, pay down debt, do acquisitions and all other things. Please keep an eye on this number, because it could indicate that ABR is a potential dividend trap. The 5-year growth rate is at 10%, which is a great number. And they increased the dividends for 10 years in a row, which is also very nice. And if you take a look at these numbers, the dividends paid since 2012, you see that ABR did increase the dividends at a pretty high rate. In this graph we see the expected dividends in 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at lower growth numbers, which is still very nice. And overall these dividends look pretty good to me, but how about the historical returns? I decided to compare ABR stock with the overall market, in this case the S&P 500. On the 5-year chart we see that ABR underperforms the S&P 500 by a decent amount. In total, ABR returned 57% including dividends, versus the S&P 500 sitting at 88%. The interesting part here is that ABR was capable of crossing the S&P 500 a few times, but always went down only short after doing that. On the 1-year chart it looks pretty different with the S&P 500, returning 27%, while ABR is having a 31% return. They managed to beat the S&P 500 here. On the 6-month chart it is the other way around, with ABR sitting at almost 5% return, while the S&P 500 is sitting at 18% return. On the 1-month chart both have a pretty similar return. To me there's not a big winner here. So bottom line, the S&P 500 beats ABR in the long run, and in the short run it looks pretty interesting. So could this be the perfect time to buy ABR stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 6, 8 and 10%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 46, 48 and 50%. For the free cash flow margin I'm putting in 30, 32 and 34. For the PE ratio I'm putting in 7, 8 and 9. And for the price to free cash flow I'm putting in 11, 12 and 13. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want a higher margin of safety here with this company. Right now ABR stock is at $12.9. I hit analyze and we see a lot of green numbers. We have a low price target of $10 to $14. We have a mid price target of $13.5 to $17 and we have a high price target of $17 to $21. And to me the low to mid price target is the most justified here, indicating that this stock could be undervalued. Which price target do you think is the most justified here? Let me know in the comments down below. So my final conclusion is that I love ABR. It is currently in my portfolio and the main reason being the dividend. Since it is a high risk, high return company in my opinion, I'm trying to keep them under 5% of my total investments within the portfolio. Most fundamentals look good and they are performing strong and steady. However, I do think in the coming years growth will slow down a bit. What worries me the most as of right now is the current ratio that is being at an unhealthy level. And also the impact rates have. This is something that of course I knew before investing in this company, but still, it hurts to see the distributable earnings to be slashed down a lot. Dividends look really good with 13% dividend yield, but 91% payout ratio is something that worries me in the short term. I do think they will recover pretty easily from this, but it will take them some time. From a valuation point of view, things look really decent, even with the low price target. For now, I keep buying whenever this holding is coming close to 4%. When it happens, I buy shares so it will go back to 5% again of my total portfolio. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.